Okay, good morning. Today we would like to present about banking credit. We are from group 8. First, what is the definition about banking credit? Credit is the provision of money or an equivalent claim based on an agreement or loan agreement between the bank and other parties which requires the borrower to repay the debt after a certain period of time with interest. It is based on the Banking Law number 10 of 1998 concerning amendments to Law number 7 of 1992 concerning banking. Advantages and disadvantages. Advantage. Loans can be done for whatever purpose is needed. It can be to buy a house, renovate a house, buy a car, and so on. All are very easy and available with various types of loans, making it easier for you to buy anything. If you have a desire for something and you don't have enough money, with a loan you can buy anything what you desire. The payment can be made within the time period chosen according to the agreement. This is what makes many people borrow, because they feel they can be repaid in installments with the desired amount beforehand. Loans can also be used to cover or build your business. If you lack funds to start or pay for a business, then you can make a loan with that purpose. And loans can also be used for long-term investments. Disadvantage. One of the risks is that if you do not pay or pay late, you will be penalized in the form of confiscation of assets or even entangled in applicable law. In addition, your good name as a creditor will be bad, or you'll be even be blacklisted from any debtor. If you cannot make a payment at the beginning of the bill, the debtor will issue a warning or other option, like asking you to pay a fee upfront or fines that get bigger to a more severe level, namely the confiscation of your assets. Loans are not always stable. You may be required to pay other costs apart from your bill. This will usually be informed upfront when you borrow or vice versa. You will be asked without notice. The larger your loan amount, the greater the risk you will face. If it is not considered, it can have an impact on the assets that are collateral. The next material will be bring out by Bunga.
Types of banking credit funding. Credit for business first is credit for business, and here are the example of credit for business funding. People business credit. A. This credit facility is given to individual entrepreneur engaged in the micro, small, and medium enterprise sector. Although the conditions provided are relative easy, the government limits access to this service. Unsecured loans need to start a business. People can take advantage of unsecured loan service provided by the banking sector. As the name implies, the service does not require collateral as a condition to the interest rates that are paid tend to be higher. Working capital loans and investment loans. C. Working capital loans are intended for customers who want to increase production, is business operation, while investment loans are intended for customers who need funding for long-term procurement of goods. Next. Loan based on return time. Second is loan based on return time, and here are the example of credit for business funding. A short-term credit usually used to provide profitable activities that are short-term, less than 1 year. An example is credit for agriculture. Medium-term credit. B. The maximum repayment period is 3 years. Usually, this type of credit is often used to help a small business with a loan value of under 100 rupiah million. Long-term credit. C. The payback period can be up to 5 years. Generally, this type of credit is used to finance industrial business purpose house or vesicles. Next. Next.
Okay, how to count banking credit? Flat interest. Flat interest is interest with the same amount of principal and loan interest payments every month, usually intended for short-term loans such as motor vehicle loans and unsecured loans. This flat interest uses a clear calculation method where the principal and interest installments do not change every month. Everything is calculated proportionally and adjusted to the tenor. The loan period is determined by the agreement of the debtor and creditor. The second one is effective interest. Unlike flat interest, which is generally short-term, the effective interest has a long tenor. With that said, it is certain that the amount of interest paid on the effective interest will be smaller than the flat due to the long tenor. Effective interest loans are commonly found in home ownership loans or other investment loans. And here are the formula to count on flat interest. Interest per month, yep, and that's all you need to know about the formula to count on flat interest. Second one is a formula to count on effective interest. As you guys can see, here are the formula of it. Next, examples of banking credit funding in the real world. Working capital loans. Working capital loans are a type of a credit support existing investment loans. This credit is generally used to increase the company's production activities. To be specific, such as buying raw materials to be made into finished product and other costs related to the production process. Consumptive loans. Consumptive loans are used personally to finance consumer goods. The form of consumer credit can be in the form of credit cards, in the form of unsecured loan facilities provided to individuals issued by certain banks. After the credit card application has been approved, after the credit card application has been approved. Second, car loan is a credit facility for the purchase of motorized vehicles with collateral in the form of motorized vehicles being financed. And interesting things about credit. Credit increases the utility of money or capital. Credit increases the usability of an item. Credit increases the circulation and traffic of money. Credit can raise the excitement of doing business in the community. Credit can be as a means of economic stabilization. Credit can as a bridge to increase national income. So where do we get all this kind of information from? From these references. As you guys can see, this is the references we are using to gain all the information we needed before. I think that's all. Thank you very much. I think this is the ending of our presentation. Thank you very much.